What's happening, traders, and welcome back to Shift Trading. What I'm going to break down for you today is a fantastic OTE trade on USD Swiss franc that occurred on Friday. Now, when we look at OTE, we look specifically at the 62 retracement level. This level is really famous across nature, in the sense of flowers, pine cones, hurricanes. You can find all of this information online. It's also used in graphic design to the point where they call this the golden ratio. And all of this information has been taken and has been converted into the markets. You can see it when people trade literally just OTEs or harmonic patterns. We use our fib retracement levels. Really powerful, been around a hell of a long time, which means it works. It's been tested, tried, tested, and works in the market, yielding profitable months. Okay, so with that being said, what we're looking at here in the market is, you can see we have an external range sweep, strong reaction to the downside. Market has then hovered around this level, pushed up again, retracing just back in on the daily, and then breaking down again below these lows. Now, we have a weekly fair value gap over here. Market is going to trade from external range liquidity to internal in the form of fair value gaps. What we're trying to determine is where our higher time frame drawn liquidity is. Okay. Now, quite easily, we sat here on Friday. We saw a strong bearish candle close on Thursday, making this our lowest hanging fruit. We want to see market target the previous day's low in instances like this, pushing towards that weekly fair value gap. Now, if I drop down to the 15-minute, a high probability setup for us is watching market play up above the Asian range, sweeping more liquidity and pushing to the downside. Okay. Now, granted, there's two scenarios in this case. There is one. If you have a look here at market structure, you can see from our New York session, where a strong impulse to the downside, market then builds up liquidity during our central bank dealers range and Asian range, and retraces straight into the 62. Okay, within that 62, you can see we have a strong supply zone that swept liquidity, breaking structure. What makes it even stronger is it's a level that has previously mitigated another supply and swept liquidity. So sweep, impulse, and in addition creates inducement, creating liquidity prior to that level to get tapped and down. Now, essentially what we're waiting for is, yes, if you want to, you can put a trigger right there, execute right down to the lowest hanging fruit, or what you could wait is for that added confirmation on the intraday level. So market respects that level, impulses to the downside, creating new supply zone that has broken structure, internal range structure, swept liquidity, and progressing to the downside. Okay. Ultimately, we do want to try and isolate a few mechanical approaches when we look at these levels. So first most important factor in trading OTEs, in my opinion, is that market, or the swing high or swing low that you are basing your fib on, has taken liquidity. It has to take liquidity. Second is you want to see it break structure. Thirdly, you want to see fair value gaps created. You want to see that momentum confirmed with market pushing to the downside. Those three are essential to trading OTEs. Okay, absolutely essential. If you manage to get inducement, that is an added bonus. Okay, looking at these scenarios, we do want to see inducement, just showing that market has taken additional liquidity and pushed to the upside. So lower time frame, we do have a bit of inducement here created just before, and we can continue down in that fashion. So what we do is we try and isolate. Okay, we have our supply zone here. We have a fair value gap. Either you can place it straight on the supply if you wanted, hiding your stop loss just above the high, lowest hanging fruit being previous day's low or the current day low. Okay, or ultimately targeting your higher time frame drawn liquidity, yielding a fantastic 6.2 R. Okay, Now, looking at these markets, yes, in hindsight, it looks pretty simple, but I assure you, if you go through a mechanical approach, trying to look for swing highs and swing lows, what determines a swing high or swing low? We have to see the low formed. We want to see a higher low on either side. Let that candle close, and then you can draw in your retracement levels. Okay, there's a couple of rules that we set in place. If this level has created 1, 2, created the low, and the third candle pushes all the way back up, that is not a valid trade anymore. That setup is now invalid, and you just have to let it go. What you want to see is prior to that 62 level is a swing low forming. Market stalling a little bit, pushing stuff for a bit of drawdown, quite fine. Ultimately, we know where we want to try and target: previous day's low and weekly low. Or, as we mentioned previously, if you're trading the Asian session, you could have just placed it right there. Now again, this is the risk of not having inducement, that you might have to sit a bit longer in the trade, but like I said, it is valid still, because this has swept liquidity, impulse to the downside. You're going to suffer a bit of drawdown while market just goes through the routine of creating central bank dealers range liquidity and Asian range liquidity. And with a wide enough stop, you should be fine to let this play out, yielding 1.62, I think it is, in and around those areas. Yeah, 1.5. Okay, traders. Now, do we only isolate 62 levels? Absolutely not. If we saw that the 62 was just, let's say for instance, this spiked up a little bit higher, creating a higher wick. Okay, we had a big wick over there, and we're trying to look at market, and we see there's a clear supply zone. We are most likely going to take it on the supply levels. Okay, as long as we see that within these areas, in the 62 range area, that we have a general idea of what market could react to, whether it be your fair value gaps or supply or demand zones. That is what we are trying to actually look for. Don't get caught up with going through the complete mechanical approach of only drawing these levels in and not understanding why market is respecting these levels. Okay, that is extremely important. All right, well, I hope that helped you guys. It's just a basic video giving you an understanding of what we look for in the market, how we use our 2-candle theory to target the lowest hanging fruit, previous day's lows, into a higher time frame, PD arrays, ultimately trying to target the power of 3. Market trading above the midnight open, impulsing to the downside, looking for our retracement levels and getting in the trade. And that is it. Okay, traders, I will catch you this week. Hopefully we have a good week ahead, and we will start doing some outlooks and trade recaps and educational content early next year. Catch you soon.